All right, guys. Good morning. We are here today. It is a big day. We got PCE inflation data. Honestly, the previous morning economic reports have been a little light for the last few weeks. Finally, today, we got some stuff going on, which is inflation data. Let's take a look. So the NASDAQ overall on the day, let me put like a 5-minute chart up here. The NASDAQ is down slightly today. Not a huge amount. The market really hasn't been open for too long. But we are slightly down today on the NASDAQ. We had some big earnings yesterday. We also have some big earnings today. When you take a look at the NASDAQ here, you can kind of see the NASDAQ, here is the start of today right here. And we are down slightly. We've been consolidating for a couple minutes. What's up, Freddie? A plus, Pawn, Tank, Swag, Nasib, Joseph. What's up, chat? Good morning. The previous morning economic. Yeah, so we got some stuff going on today. We got PCE data. We'll put these numbers up on screen so you can kind of see what they're looking like today. But yeah, inflation report today. Big report, honestly. We also have jobless claims, unemployment filings dropping simultaneously. So pretty big report. Yeah. What's up, Raz? Core PCE is expected at core PCE, let me see what we got. Expectations. Core PCE today is expected at 0.3%. Expecting an uptick 0.3% month to month, which is an increase from the 0.1% it showed up last time. So 0.3% for September. Jobless claims are expected today as well. That's a pretty big report. Yeah, so we got the unemployment report today. Jobless claims today expected at 230,000. This will be an interesting report. Alright, so there's the report there. So again, we got Chicago PMI jobless claims. We got the expectational numbers here. What do you guys expect? Yeah, nice pawn. Alright, so again, here's a 5-minute chart on the NASDAQ 100. Hasn't really done too much here. Let me see if I got my cool little pin out. Yeah, so here's the pin. So again, here's where the morning started right here. And so we are down since the morning started and now kind of sideways. Bounced up recently short term as well as what we're looking like. So, a lot of this is based off of like Meta. We had Meta, Microsoft earnings yesterday. You can kind of see those here. Microsoft at 416s, Meta all the way up at 470, 570s. What's up, Kyle, Yair, Corey? Honestly, I'm just ready for this election to end. Literally so much election stuff. Ugh, man, I'm ready for it to end. Yeah, so again, here's the NASDAQ. We'll put the Q up. Here's the Q, 490s. Weak a little bit this morning, so a little red on the Q at 490s. We'll see if we can break and hold over 500. Meta still pushing up a little bit, slightly green, or close to green at least. It's pretty much completely flat for Meta right here. You can kind of see it. Didn't really react very good on earnings, so it's still down in extended hours overall for Meta. It did drop some in extended hours here. You can kind of see it. It closed the day here. Earnings came out, and then it dropped. So Meta, a lot of stuff. Uber released earnings already this morning. So we had a couple earnings. Uber specifically came out, and Uber's down to 74s. And I like Uber, but I also think, I think Uber, if the current infrastructure remains, that Uber's gonna be fine long term. So I think if the current infrastructure remains, Uber's gonna be fine. I think it's gonna obviously beat Lyft in terms of the race for ride sharing. The problem though is that the biggest risk to companies like Uber, in my opinion, are companies that are really like FSD and full self-driving. I think stuff like that is going to render some of Uber's business obsolete once cars start to drive themselves. You know what I think will happen is people will have their own, FSD, and it'll just drive them everywhere. They won't have to ride share anymore. So, but I think that's a long way out, and so I think for the short future, we're going to see Uber do well, even with this drop. I might be wildly wrong. I have no idea. Yeah, I've seen the Supermicro semiconductor situation, and it is down more, and pre-market down under the lows of yesterday, currently at 31.25. Yeah, the problem with the problem with Supermicro is it got really big really quickly. Greed drives stuff like this sometimes with Supermicro, where it got pumped up way too much, way too quickly. People got way too overconfident in it, and what happens whenever you're gambling your money is that nobody ever wants to hear the bad stuff going on. And so a lot of people just kind of stick their head in the sand in regards to Supermicro semiconductors. And, at this point in time, you got independent auditors walking away from the company overall. I think there's obviously tons of risks. I think it's big risk, big reward, though. I think maybe Supermicro bounces back. I do think it's possible for SMCI to bounce back. I'm not saying it's going to. I do think it's possible, though. I think it's possible it bounces back. We'll have to wait and see, but I think it's possible. Can y'all hear the music? You should be able to. What's up, Triv? Is my volume good? My volume should be pretty good. All right, I'm gonna put a timer up. We got PCE inflation data. Massive report today. Massive. We got an hour in 14, and I'm gonna do the timer exactly right today. Timer is exactly right. So we have a cool an hour and 14 minutes. Chat. Volume low, no music. Can you not hear the music? Music's on, it's just not very loud. Do you think Meta will come back after the dip? I think it could. I think it's going to eventually. It's just how long are you willing to hold and wait for that? How low are you willing to let it drop before sell is the question, and I don't know. It's not CPI data today. Today is PCE inflation data. You can kind of see the expectations for right here. Expected at 0.3% for September. Jobless claims are expected today at 230K. Both will be covered fast upon release at 8:30 Eastern Standard Time. So now, is the music louder than my voice? I turned the music up. People said they couldn't hear the music. There, that should hopefully help. Where's Tesla at? Tesla, see, I think Tesla, the problem. So Tesla has positioned himself way too political to where Tesla's health is ultimately dependent on this election. In a lot of ways, I think. Maybe I'm wrong, but I would assume if the other gets elected, Tesla's going to go down. And so we'll see. And again, I think that's Tesla's fault. They've been way too political. And again, I'm not against you. I'm not for you if you're political. I'm just neutral. Music is good. All right, cool. All right, so we got a couple hundred people here. We're going to do a poll like we always do here, chat. Does today's PCE inflation data come in higher or lower than the 0.3% expected? Its core PCE is the one you want to watch. That's the most relevant one. So core PCE is the big one you want to watch. Yeah, we did have some other stuff come out this morning. Yeah, so European CPI came in higher than expected, 2.7% for core CPI year over year in Europe. Regular CPI came in at 2% versus 1.9% expected, slightly higher than expected. We also have the Challenger job cuts in about 12 minutes. Bunch of big earnings today in Apple and Amazon, so we got Apple, Amazon earnings. Bitcoin altcoins are stalling. Yeah, again, I didn't say the second half Lang. I'm very neutral. I'm not gonna really pick sides here or really be like, yeah, you know, I'm very neutral. I just try not to get wrapped up in all of it. I'm not gonna support or go against either person. I'm just gonna remain as neutral as I can be. So yeah, this stuff drops at 8:30 in an hour and 11 minutes. There's a timer right there. So we'll see. And then the big report this week is really tomorrow. Like non-farm payrolls, unemployment, a massive report. So those are big reports. We'll see what happens there for it. But those are huge reports. We'll see what we get. I'm ready. Again, Supermicro is still down at 3 at those levels. Meta will recover today. I don't know. Meta's at 570s. It's not down that much, honestly. I mean, percentage-wise, it's not a small dip. Like percentage-wise, Meta is down from essentially where it closed at 590. And it dropped all the way down to 575. Really, it dropped a little bit lower than that, but we'll call it 575 because it's bounced back. It's over 575 now. So yeah, Meta's only down 2.5%. It's not some crazy like downfall. Microsoft is a similar thing in which Microsoft percentage-wise might be a little bit more. Let me see. So Microsoft was at 435s. It currently is at 415s. So Microsoft's down 4.6%. So Microsoft down a little bit more, like I said, but not too bad. AMD has been one of the ones that have been hurt the most from this earnings report, like this earnings season. AMD had earnings the day before yesterday, and they are down significantly. You know, AMD hit highs prior to earnings at 168. 168, really it hit basically 170. So from 169 down to where it's currently at now, which is 147. AMD is down 13% in 2 days. 13%, a very big drop for AMD. If you look at this here. $13% decrease in AMD. Yeah, so I'm looking at this. I got some weird ear pain right now. Everything's gonna be okay. Thoughts of Snap, yeah. Amazon, Apple, Google earnings or not. Yeah, AMD, again, Amazon and Apple. Apple's one of the heavily weighted stocks in the market. Most heavily weighted stocks in the market. I'm gonna put a 1 minute chart up. Now we are upward trending here, but I think it's also possible we downtrend. So I'm gonna short this in this challenge account. The long-term trend is down, so we're gonna try to play that. We will add to this if we can. Rangy day, yeah, for sure. Well, you don't love to see this. I'm going to add one more position and then give it time with 3 contracts. Again, this is a challenge account. We've already built up profit on this. We're just trying to get it close because we want to trade something earlier in the morning. And I like the downward trend, but we do have some economic reports. We got inflation data, PCE inflation data coming out. I don't know if gold's a bubble currently. I think there's a couple ways you could look at gold. Like gold goes up long term, but it also goes down long term sometimes too. And so the problem with gold is that I say this, I feel like a broken record when I say this, but the problem with gold is that it'll go up for a decade, 5, 6, 7, 8 years, and then it'll downtrend for 5, 6, 7, 8 years. And so I wouldn't really call it a bubble. It's just a long-term trend. And, you know, you get to the top of ranges in long-term trends sometimes, and you just got to understand it. Eventually, we're going to start correcting sometime in gold. And really, we'll have to watch what happens. You know, I don't know how gold's going to respond to the election, but we're going to have to watch and see. Time will tell. And, yeah, I'm going to take one of these positions just immediately off here, just a risk management. Limit my position a little bit, and we'll give the last 2 contracts time to roll. We are now basically flat in this position. We're gonna go ahead and cut a piece there, lock it in, and then try to bring this thing. I like this confirmation actually, so we're gonna add to this and then see if we can get like a cup and handle move. Flat so far. Some too. We got 3. Isn't gold pure speculation? It has no real use. I mean, it has a use for sure. They use it in technology to a certain extent. That's number 1. Number 2 is that it's an inflation hedge long term. It's a precious metal. Gold is one of the most consistent long term investments you could ever get. Short term is when it's risky, and it's risky short term because it goes up for a long time and then it downtrends sometimes for a long time. And so like gold's not too bad, but here if we break this high, I gotta just cut it and just accept I might have gotten the trade the top wrong. Again, gold can be good, but it also just can be risky. Cracked over the top of this range. Not really what I wanted to see. But yeah, the point is gold has like almost 10x in the last 25 years. 10x. It's outperformed the S&P and the Nasdaq both. We're gonna fix our average a little bit. Try to be a little bit more patient with it. We're down now, but not the worst down. Yeah, it's got small uses. Hey, what's up, info? Hey, thanks, man. Yeah, like the way you have to see gold. So again, we somehow turned green on this trade. Again, I'm gonna unload half of it there. We're going to add to our winning trade here. And then immediately take the profit. So we're green now. We'll see if we can manage this better, though. I don't think we're necessarily managing it well. We called the top. And I like this top more, but I also think it's possible that it turns back up. Yep. We're going to get out. So we're kind of flat overall here. We made $80, or we lost 80, made 20, lost 40, made 20, made 140, and then lost 70. But I might jump right back in it here. This is a challenge account, so like if I lose, it's not the end of the world. And this is why I'm a little indecisive. It's a little early for me to trade, to be honest. But we are in the hour preceding economic reports, and I think we could get choppiness leading into these reports. So I'm going to take a swing here. Yeah, there's a lot of uses for gold. You just have to understand the nature of it, which is like, I would buy, this is, okay, if you want me to be honest, I'm going to go full size here. All right, so we just got 5 contracts full size. We're just taking the risk in the account. So gold's a great investment long term. And when I say long term, I mean over a decade. Anything underneath that, there's risks. What are the risks? The risks are simple. The risks for gold short term are that it can downtrend for years, right? And so long term, great investment hedge, great inflation hedge, does very well consistently long term. Short term, it can do freaking anything, and it can downtrend for 5 years straight. That's the nature of gold, and that's what you have to understand. Like, you're gonna run into the situation where no matter where you are, people are gonna be yelling at you to buy gold, right? There's specific type of people that really push you to buy gold. The problem is that, in my opinion, right now, I'm not buying gold right now. Gold's been uptrending for freaking what? Let me see how long. Gold's been uptrending since 2016. Literally 8 years of uptrends for gold. 8 years. All right, there we go. We took our big risk, and it paid off here. Yeah, we'll go ahead and cut the rest there. So we were right about our direction and our time to take that risk. Yeah, we cover all the big earnings, all the big economic reports, all the big data, all the big press conferences. Yeah, like we cover like all the big events and markets. We're mostly an economic report channel, so we cover economics. We day trade, like you see me day trading right now, but I don't even really claim to be a good day trader. Yeah, so that's just kind of what we are. All right, guys, we got 1 hour. We got an hour left before the big report goes live. Yeah, so that little mini cup and handle work. Honestly, one of the most powerful systems, one of the most powerful patterns, I should say, is a head and shoulders pattern. What do I mean by that? Putting in this is what I mean. So this pattern right here, one of the most powerful patterns in trading anywhere. You can use it on any time frame. It goes here, it goes up, and then it goes back down, and it's parallel with this one, right? That pattern right now. Today is Halloween, so we're gonna call it the ghost pattern, but it's really just a head and shoulders. That pattern, one of the best patterns in the game. It really is. At any time frame, if you can use it in conjunction with like extension and trend, even better. The reason I took this is because I think it confirms the long-term trend, and we got a short-term cup and handle pattern. You know, a really short-term. But the long-term trend still remains there. So like if I zoom out even more here and I look at this long-term trend, I think it makes sense. You probably see it better on a 5-minute chart. Yeah, on a 5-minute chart we have, let me clear some of these levels. But on a 5-minute chart, I'm going to try to draw it. I got a lot of levels already on the chart here. But on a 5-minute chart, we kind of see this right now, maybe a little bit worse. Short term, it's probably more so like this. Hold on. Let me just do a trend line. It's gonna be easier. I'm trying to catch where the angle actually specifically is lining up with this. That trend is what I currently see. Not perfect, but it's not terrible either. And that's the trend I was looking to attack. You can kind of see it here. So if we get all these other big levels out the way, I'm going to leave this bottom level, to be honest. But if we get all these other big levels out the way, That's the trend I'm looking at right there. That's the trend I'm targeting. What's up, Kano? All good, man. You can run out of gold today and nothing would change. All electronics and use cases using gold. Here's the problem. The only other problem I have with people with like a talk about gold, right? You hear some people be like, the world's gonna end. You all better buy gold. And it's like, why? Like, what's gold gonna do if the world ends? Right? It's a shiny rock. Like, what's it gonna accomplish? Nothing. The world ends. Ooh, I got a bunch of gold. Ooh. You know, congratulations. You got a bunch of shiny rocks now. You know, it's not gonna be what people use if the world goes crazy. I don't think the world's in, like, you know, just to clarify. But gold, in essence, is just a shiny rock. Now, it's used to some. Now, silver is actually used much more in technology. And so silver actually has a lot of utility in technology. But at the same time, I think that's actually an argument against as big of appreciation as we see in gold. Because when silver is used heavily in tech, there's an incentive to keep the price down because it's used so much. Because if silver price spikes, a lot of smartphones are going to have to... A lot of tech companies are going to have to pay for it, and they're not going to like that. Well, there's a lot of other stuff. Probably food, blaze, tools, you know what I mean? Labor, yeah, protection. Like those things are all going to be much more valuable than gold. Nobody's going to care about gold. They're going to barter other things most likely if something happened like that. No, am I wrong? Right? It's gonna be like medicines, food, protection. You know, that's what's gonna be big, not gold. Gold's just a shiny rock, straight up. Pokemon cards, Charizards. All right. Water. No, I disagree, Blaze. I think bartering's much more convenient. Like, hey, I got a bunch of food. I'll trade you that for those tools over there. Deal. Boom. Done. Take my food. I'll take my tools and have a great day. You know, that's much more beneficial than, like, again, you got to genuinely think about it. I know it's been fed to people like, yeah, if something crazy happened, gold, guys, but you got to really think, does gold have any utility? You got to really think about it, right? Like, in those situations, people are not going to care about a shiny rock and gold. It's not going to hold any value. Nobody's going to care. It doesn't do anything. It serves no purpose. The only way it serves a purpose is in macro markets, in big markets in the world, right? But outside of that, you know, it serves no purpose. Well, I mean, what if the tools are much more than all the food you have? Well, then you can't do it. You know, you get less tools. It's the nature of barter, I think, rather. And I like gold as an investment, but I don't think it's going to hold any weight if ish hits the fan, so to speak. I think it's, you know, I just don't think it does anything. And I think that should be very obvious, too. Yeah, everybody would have to have gold in order to barter, and not a bunch of people have gold. It would turn into a useless rock. I'm not saying some people wouldn't save it, but, like, I mean, we could find these really obscure situations, Blaze, and use that as an argument for gold, but I think, like, I think it's very self-evident. I think the point remains, right? Like, it's gonna have to do with convenience over everything else. Like, we could create a situation in which, like, you need something like that, but again, I think it's going to be more so just trading things that you need. And I think that's very clear. I think that's very obvious. You know, I don't think anybody's going to care about gold, and I think that's pretty, like I said, pretty self-evident. And I think the problem is that gold has been stereotyped as some type of, like, nest egg in case something like that happens. And I think it's silly. I think if you really want, like, if you really want to do that, like save food, save non-perishable food. Save. There's a lot of stuff you could be saving that are going to be much more valuable than gold in those situations. It's kind of like diamonds, right? Like nobody's going to care about diamonds either because they serve no purpose. And so like things that have value, that have tangibility to us now, and value don't really mean much in certain situations. And so it just depends on, yeah, it's all good. We could always agree to disagree, of course. Yeah, maybe Blaze. I don't know. You might be right. I don't know. I don't think so. I disagree still. I think it's going to be mostly just a bartering system. I think that's too complicated. And I think most people aren't going to have just pieces of gold laying around and stuff. And then the question remains how do you identify what's real gold and fake gold? And sure, there's some methods to do it, but it's going to be a lot less sophisticated if stuff like that happens. And so gold's going to it's going to be even more diluted because of fake gold and stuff. So people are going to stray away from that real quick, I think. But again, it's fun to talk about. Yeah, stocks will be virtually worthless too. It's why I always tell people, right? I say, hey, look, at the very least, if you're sitting on cash, and I don't think anything is going to happen like this. We're just talking. But if you're sitting on cash, okay, why not buy treasury bonds? Or at least like treasury bond ETFs or something that's going to pay you a little 3, 4, 5%, right? Like you should be able to throw a rock into the wind and make 5% right now. You really should, especially when the S&P, the NASDAQ, the Dow are doing freaking 20% a year the last multiple years in a row. And so, but you talk to some people and you're like, hey, like you're sitting on $100,000 in cash and you're just sitting on it. You're not doing anything with it. Why? Like you could earn thousands of dollars a year buying treasury bonds, short-term treasury bonds. And I've asked some family that do this, and they always get the same answer. Oh, well, I don't trust. What happens if the government fails? They'll say. And it's like, look, bro, if the government fails, your paper bank money means nothing. You know what I mean? Like it doesn't mean anything anyway. And so if you're sitting on that much cash, you're losing money to inflation. The problem with inflation is real. And if you do not hedge against said inflation, you are going to lose boatloads of money over time. I can show you the math, and I do this once every little while. But say you got $100,000 in cash and you lose 2.5% a year, which is about average inflation. In 30 years, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. In 30 years, you're going to lose over half of that money. In 30 years, 100K is going to be about 45,000 in buying power, 46,000 in buying power if you round up. You're going to lose your money to inflation over time. And there's a lot of ways to hedge to make at least 3, 4, 5% a year, so where you at least at the very base keep up with inflation. That should be your goal, keep up with inflation. If you do not, you are losing money over time. For sure, losing money over time. Because inflation is an inevitability. It's going to happen. It's going to happen regularly. It's going to usually happen every year. There's only been a couple scenarios in history in recent history, in which prices literally went down. Usually they go up. So the overarching point I'm trying to make is hedge against that. Like invest your money. Don't sit on cash and be a dinosaur and just lose it all to inflation over time out of some weird like distrust of whatever. Yeah, hope that makes sense. You're wrong about gold and silver? No, maybe. So you're on Top Step TV. Thanks, Sharkeys. What's up? Hope you're doing good. Yeah, I mean, listen. I could certainly be wrong here. Really, we're just speculating. Nobody knows in that situation. Like, we can pull up instances throughout history, but unless it's... I don't think we've seen any instances that I'm talking about throughout recent history. So... Bitcoin. Yeah, that's going to be nothing as well. Bitcoin's definitely not the answer either. It boils down, my argument boils down to convenience. What's going to be valuable things that help people, and food, medicine, you know. All right, guys. AMD still down, starting to bounce back up a little bit. S&P still the SPY still under 600. Didn't the SPY get close to 600 not that long ago? Still didn't quite hit it yet. The real question is, when does the SPY hit 600, guys? SPY currently sitting at 576s. You know, when as high as 580s not that long ago. If we look at the S&P E-mini, when is this gonna hit 6,000? Got kind of close. Got up to almost 5,900 not that long ago, but a few days ago. But yeah. Yeah, we only got a little bit of left to make. Let me see. And the top of that range worked beautifully for me here. I'm gonna short this too. All right, guys, we got 45 minutes left. 45 minutes. We got 400 people watching. Hit the subscribe button. Hit the notification bell. I appreciate it. We got 2 contracts here. Zombies use crypto. I heard they use zombie coin. Yeah, so we built up a little bit of a cushion here, a small cushion. Enough to where we could lose a couple $100 and be back to break even on the day so far. I take 2 contracts here. Alright, guys, again, PCE data expected at 0.3%. Non-farm payroll is the biggest report this week, I know for sure. Is going to be non-farm payrolls. Challenger job cuts came in at 55.6 for October. Could have been worse. Again, jobless claims expected at 230 is what I'm showing right now. 0.3% core PCE month to month. Alright, so we're green now. Let's see if we can go break down more and look really green here on this trade. I'm going to take some off. I didn't really get a good feel, but it's protecting the trade some here. And we'll add it back if we rebound back up. Yep. Alright, so we're back in. But yeah, core PCE expected at 0.3%. It's expected at 2.6% year over year for core PCE. 2.6% year over year. Yeah, the big numbers today. We got Apple and Amazon earnings this afternoon. Apple and Amazon earnings. So crazy big report day. All right, so we got our swing here. I just want to see a retracement. I feel like you are quiet again today, bro. I don't know if this mic is off or what, but man. I'm gonna put this thing right next to me, see if you can hear me better. I gotta be careful here, it's turning against me. Now, we get out here, we're gonna be flat on the day, so, and that's all right if we are. Ideally, I'd love a retracement all the way back down here, which we're starting to get, but I also have to be prepared for it to go the other way. We built up a cushion. Now we're taking a large risk with the cushion we have of about $500 on the day. And again, I'd love a retracement back down, which we kind of keep doing, but we don't really hold. You can kind of see how fast 5 contracts. This is Top Steps funded account program. And so they give you a demo, test your skill with the demo. If you pass the test, they fund you. If you fail, you only lose what you pay for it. We're trying to get funded in an account today. And if we fail, it's not the end of the world. It's 49 bucks. We always reset it. Very close to cutting this. I just want to give it 1 second to retrace, but it can kind of keep popping up. This is a 5-minute chart. Oh no, what have I done? Oh no. What the heck have I done, guys? Oh my gosh, bro. Alright. I don't know what the heck I just did. But it's alright. Alright, here we go. We're back. Volume and music? Your voice and music, I would have my max volume. Yeah, I mean, I'll turn it up. I'll switch mics if you guys really need me to. It might be time for me to just buy a better mic. Like just a better microphone. Like I use these, the Blue Yeti microphones. Just, they break a lot and they're nice for the price. Any recommendations on a nice mic for like $500 or less? Let me know. Hey, thank you, Kay. Thanks for subscribing, brother. We appreciate it. This is taking too long. I'm going to limit some of this risk and just cut a piece of this off. And then be a little bit more loose with it and see if it turns. And if it does, great. I'm okay with it. There we go. I'm going to take another little piece of it off down there. My job when I'm down $500 is to protect myself here. So we're still up a lot on the trade, on the day. But I think 3 contracts gives us a little bit more room to fix my average if it bounces up. We're trying to play off of this trend line up here. Yeah, so Apple and Amazon both report after hours. You think Shure microphones are good? Which one? Any recommendations? So we're kind of going the other way now. Alright guys, we got 40 minutes left, 40 minutes. I don't want to add to this, I would. I like the range, but I think if we break out of this trend. We gotta cut it and just come back, live to fight another day, I think, here, guys. So we are still up. Yeah. We're still up good in this account. We just got a little bit of ways to go. No, I think it might actually go my direction too. I think it might actually play it out, but yeah, time will tell. MV7. Yeah, it's probably time to upgrade my microphone, man. Like I know, like I have the Blue Yeti and I've been using these for years and they're cool, but they're just, you can tell they're just not that, like they could be better, right? Their problem is they break a lot and they don't pick up my sound quality as good as they could. Like this thing's right in front of my face. It should work really well, but I've got another mic I could probably try to use. think I probably need to use a different mic, so I think I probably need a condenser mic, maybe. I could also change some of the settings here, so the gain is kind of low on this mic. Okay, so I just turned the gain on my mic up a little bit. Now this should pick up more sound. Yeah, so this should ultimately have more sound. Let me know if this works, chat. What's up, Arif? Where do you think Reddit is gonna stop? I don't know, man. Reddit's been doing crazy stuff here. Crazy stuff. So yeah, I turned the gain up on the mic. So that should hopefully help. For whatever reason, somebody turned the gain all the way down on my microphone. I think I know when it happened. When I went on Top Step TV, I accidentally pressed mute and completely forgot about it. And so when the show, like, I had like 2 minutes before the show started, and I was panicking, and I think I was just pressing buttons on my microphone. So I didn't realize the gain was already down. The gain is how sensitive the mic is. So the mic was basically at the lowest sensitivity it could be. This should hopefully make it a lot better. I probably don't even need to buy a new mic now. All right, so we did break over that trend line. Me cutting it there was probably the right move. And we'll see what we get now. Yeah. All right, good. A lot of people saying that helped. Nice. All right, cool. Hey, we got 500 people live. We got 40 minutes left, basically 35 minutes left until this data comes out. It's time, chat. I'm excited. If you haven't already, try out Top Step. Top Step funds traders and futures. They give you a demo, test your skill with it. If you pass the test, they fund you. This is what I'm doing. So basically what you see me doing here. And again, you hear people say whatever they want about funded account programs. What you have to understand is that if you are learning how to day trade, a funded account program is like a souped up paper account. Right? It's a paper account, but if you follow some rules and you do specific things, you get funding, you can potentially make money, like real money from the paper account. Like that's essentially what these funded account programs are, and that's a beautiful, powerful thing. Because if you're learning how to day trade and you just try to do a regular paper account, you're gonna have no pressure. You could just take max size, not care about losing, not care about anything, and you know, it's not realistic. Is the problem with paper accounts. Like people try to make a certain amount on paper and then go to a real account. Your emotions are wildly different because trading is about learning how to control your emotions, be disciplined, and manage your risk. And so the reason this is a beautiful middle ground for day traders is that you can day trade on this thing, and if you follow the rules, the base one's only $49. And so if you're gonna pay for real-time data outside of this, it's going to be a similar amount. So the value's there, right? If you were going to pay for a demo account and real-time data outside of this, it's going to cost about the same as the base challenge on Top Step, which is $49 a month, right? About the same, right? So anybody that wants to critique all this stuff, it's going to cost about the same. The difference is that if you make 3K in profit without losing 2K first and following their rules and conditions, they fund you 50K with a 90% split. And then if I make 10K afterwards, I get to keep 9 of that, 90% of it. And I also get to keep, I think it's like the first 20,000 in profit. Y'all correct me if I'm wrong. It's something like that. And so it's a beautiful middle ground where you have some risk, not the full risk. Most day traders lose. If you put up 10,000 of your own money, you're probably going to lose at day trading. And so this is a way to limit that risk. Get some like testing in for your trading. And if you lose, you probably would have lost more day trading funding your own account. If you pass it, you get a 90% split anyway, which is similar to funding your own account. And then if you're good enough, you can withdraw and fund your own once you build up some profit in the funded account. There's just a lot of, it just makes a lot of sense. And in the futures market, there's no PDT rule. You can day trade, short, buy market, sell market. Very similar to day trading stocks. You can day trade the QQQ price action and what's called the NQ. You can day trade the SPY price action in the S&P 500, which is what the SPY tracks. The futures S&P 500 contract. You can trade the Dow, the Russell, currencies, gold. Patterns are super similar. Check them out. They're an affiliate, or this is the top 3 plug in the world right now. They're an affiliate of mine. I'm biased. Understand CFTC 4.41. Is the gain up too high now, guys? Is the gain up too high? Is it? All right, so we're going to start shorting here. We've pushed up. I think we're going to start to correct back down a little bit now. But I might be freaking, who knows. Now we're flat. No, it's all good. No, sounds great. Mic level is perfect. All right, we're slightly green on this thing. So I wanted to see what my fill was. I need to keep like 3 contracts max, I think, size. 3 NASDAQ contracts max. Sounds good. Peloton. Yeah, Peloton actually went up for once, man. Again, the Peloton, a big story. They just got really big really quickly and made too much money too fast. Started doing dumb stuff with it. You have no distortion. Gain is fine. Okay, good. All right, chat, 30 minutes. We got over 500 people watching live. Late to the stream. Sound is great. Very good. All right, so we just made a nice little string of green trades. We made about 150 bucks, give or take there. We were correct about the turnaround, but yeah. Supermicro tanked yesterday. Yeah, Supermicro did horrible. Yeah, no, they just got crazy solo. Like they again, after the pandemic, they got really big really quickly. But the problem is that they started producing things that nobody asked for and nobody wanted. Right? Like they should have made everything more efficient, changed their business structure a little bit, like slowly grow. But the problem is everybody wants to get rich too quickly, and they ended up just wasting boatloads of money. I'm trying to look at their EPS graph. I'm curious. Yeah, so Peloton. The only time they ever made money was for a small period of time in 2020. Ugh, maybe I should have stayed in this position. All right, we're going to pivot. We're going to buy the dip now. We're now going back to the bottom of this trend line. All right, we're going to take 3 contracts max, and we're going to stick to that rule that we gave ourselves. Unless we're desperate and we need to add to it. We're still kind of flat here on this position. Just about to go profitable again. Yeah, auditing issues for SMCI. All right, I limited some of the size just because we finally got back into the green, and we'll lock in a little bit of profit. I guess we're not going to lock in profit there. We got some terrible trade management problems here for sure. We're going to get out of this. Ugh, not managing my trade super well. I mean, we're doing all right in this account, but still. Yeah, we're fine. Well, yeah, there's a lot of derivatives. Those are called derivatives, Thomas. So you can trade a lot of dumb stuff with derivative contracts. Personally, I stay away from most of them. Like, if you ever watched the movie The Big Short, what they were trading were derivatives, right? Like, derivatives are basically like making a market for things that don't usually have markets. Hey, mate, hope the training is going well. Hey, thanks, man. Is lower or higher numbers in both readings best for markets? So higher PCE data is higher inflation. So higher is worse for both, right? So higher PCE data means higher inflation problems, which is bad right now considering all the economic strength we've seen. What the market's going to fear from that economic strength is inflation. So with payroll numbers and prelim payroll numbers yesterday coming in higher than expected recently, as well as the payroll report tomorrow, people are going to have their eyes on inflation problems. And so PCE in that regard is going to be really important to watch, because higher PCE means higher inflation, and the Fed's preferred inflation metric is specifically PCE. And so the Fed uses PCE to gauge everything. Jobless claims expected at 229. Higher number there is worse as well, because a higher jobless claims number means higher unemployment filings. So jobless claims is unemployment filings. And again, that drops 8:30 Eastern Standard Time. I'm going to short this, and I'm going to take some size. It's hard to explain, but maybe. Sometimes like at least 50% of these big candle wicks fill. And so I'm looking for that, but we'll see. Not really loving this now though, to be honest. There we go. I'm gonna limit my size now that we're almost flat. I gotta listen to my own. I'm managing trades horrible this morning for some reason. Alright, so now we're about flat on the trades, which is good. AMD's been running up some too. I think it needs some room as well here. Yeah, I guess I was correct about this direction too, where these gaps fill some, at least so far. The trend has kind of changed some here, where like usually, so we're flat basically now on this, but I like these little gap fills, but it's taking too long. Like there's another candle opening up right now too. So I'm trying to be patient with it, but I don't necessarily like that. I love your morning videos. Hey, thanks so much. This is the last set of data before the next FOMC. Yes, 100%. So the next FOMC meeting is next week. This week's economic reports are the last set. Correct. The only thing we have next week is manufacturing numbers. So next week we have ISM services data on Tuesday. So we also have jobless claims, but you got to think this is the last day of the month. They're not really going to look at the week's data preceding FOMC decisions to make decisions. They're going to look at the month prior to make FOMC decisions, right? And so they're going to look at October when they make decisions. They're not going to look at the 3 or 4 days preceding the FOMC meeting. It's too short term. I hope that makes sense. So they're going to look at payroll numbers potentially, but that'll probably be tomorrow. Tomorrow's data might be the last thing they look at here. The last thing. Honestly, the market's slowing down a lot, but we're going to go ahead and cut that. So we actually made money again somehow. 20 minutes plus, guys. We got 600 plus people here. We got over 20 minutes left. 21 minutes. And we were correct about this move too. See, dude, I'm managing my trades so terribly today. It's like I'm correct about everything. Or I'm correct about this. Like I called this. Again, one thing I'm seeing, a nuance of markets recently. Typically, I would look at hammer candles. Candles that look like this. Right? Like hammer candles. Candles that look like this right here. And I would use that to gauge momentum on the upside, because a hammer candle usually signals upward strength, right? But recently I've seen this exact thing happen, where you have the hammer candle here and then it fills about 50% of that gap at least. Sometimes it fills more and just continues to drop back down. And so recently I've seen the exact opposite nuance of markets, where we have the hammer candle here, and then we've got like a big candle wick, and then the next candle goes like this, back down. Basically, like the next candle looks like this, where it basically fills the gap on the back down, at least 50% usually. And then sometimes it retraces and goes back up and fakes people out and consolidates, and other times it just continues to go back down. And so what I've been doing is I've been shorting those movements here. Like you can kind of see that here, you can kind of see that here. So, and we got exactly that. So I should have stayed my big size and I would have made a bunch of money. But it's all good. We made money. Yeah, lower than expected is better. Higher is worse. So higher means more unemployment filings if it's jobless claims, and higher PCE means worse inflation problems. All right, guys, we got 20 minutes left. There's something happening. Do you think it's because you're live and distracted, or would reducing your size enable you to hold longer? I think it has to do with I'm live and I got a bunch of people watching me, and it's also early in pre-market, so I'm not as confident in momentum and direction, as well as I'm not used to trading full NASDAQ contracts. Usually I'm used to trading micro contracts, so my risk is much less. So when I see big numbers get thrown up, even if a couple $100 is a pretty small amount with regular NASDAQs, I'm just not used to it. It'll take conditioning, like Pavlov and the dog. I have to condition myself over and over again to get used to it, and that'll take some time. And that's kind of what you guys see the last few weeks, is me getting used to regular NASDAQs. But yeah. Yeah, I mean, being like, as a father and husband, a lot of people rely on me for stuff, and so I do my best to get everything done, but thus is life. Microsoft Cloud revenue went down quarter over quarter. Yeah. And a lot of big tech is down. And then we got some big earnings reports coming out today, too. So we got Apple and Amazon later. So it's just a big time, to be honest. Yeah, any dad probably understands this. You know, I got a beautiful life though, I really do, man. You know, and I think that's why I get some haters too, is because, like, very happy, very fulfilling life. I got a beautiful wife and kids, and you know, I live a good life, and I just try to stay grateful for it. I really do believe, you know, whatever you can draw whatever conclusions to it, but I really do believe that you got to just be grateful for what you have. And I think putting yourself in like a appreciative, like good, happy state, you know, is just beneficial for you. Stress goes down, all that good stuff. So I try not to take myself too seriously. And so that's why you hear me joking around, like playing around, making fun of myself. I'm self-deprecating a lot because that helps me to not take everything too seriously. And, you know, sometimes I lose, and, you know, of course, some people will still try to drag me down, but like I can just kind of laugh at them, and they're just kind of a laughing point most of the time. And I think most of the time, misery loves company. People are just unhappy, you know. But yeah, so 7th. So next week's a crazy week. I don't know what to do with the election. Like, I don't know whether I should cover it, how I should cover it, all that stuff. I don't know. 47, bro. 46 and a half, dude. Nah. 47, bro. I'm not that old, man. I don't have gray hair yet. Not anything major. My hair is gonna go gray sometime soon, though. I think I'll be able to pull it off, you know, but not there yet. You know, we'll see. We'll see how that goes. Positivity over it. Yep. Yeah, being a dad's fun. All right, guys. Meta pushing back up, though. Meta's almost up to 581s. And I think this is dragging markets up some as well. We got 15 minutes, chat. 15 minutes. Again, Meta's moving up. AMD moving up a little bit this morning after super rough. Yeah, well, good luck, EC. What do you think about today's data? I don't know, man. I think it'll be interesting to see. We'll have to wait, of course. I hope it comes in low for inflation data, but it could also obviously go in high. We'll see. Yeah, Google did great, honestly. And Google's just a strong company. It really is. Google got a low PE. Google has a low PE ratio. Very strong long-term trend. Super diversified as a business also. So, I mean, Google just makes money. Oh, yeah, my second kid definitely was the challenge. My daughter was super easy, super sweet. Just a nice kid, man. My son, different. Much different than that. Hey, well, good luck, Vassal. I hope you make some money, brother. I have 3 babies, 2, 4, and 6. Your next one's got to be 8. Or no, your next one, you gotta. So you've been doing it. Never mind. You've been having babies every 2 years. Sounds like my math times tables. Who's your favorite watch brand? Steve. No. I like Rolexes. I do. I like Rolexes. All right, chat. Hey, we got 15 minutes, 13 minutes to be exact here. 13 minutes. Yeah, it's like Benjamin Button. He pops out at 8. This is weekly unemployment claims. This is jobless claims unemployment. Yeah, it's a big report. Jobless claims numbers. All right, guys, we got 12 little baby minutes. Give me your last minute predictions. It's expected at 0.3%, chat. 0.3% is what's expected today for jobless claims. 0.3%. Or no, I'm sorry, for PCE data. Core PCE is the big one. It's expected at 0.3%. Last time it was 0.1%. Regular PCE is expected at 0.2%. Last time it was at 0.1%. PCE year over year, not excluding food and energy, is expected at 2.1%. 2.1%. Core PCE year over year is expected at 2.6%. Now, this is the core PCE year over year is the inflation rate you hear Jerome Powell and the Federal Reserve and the FOMC reference. This is the one he references because this is core inflation data to them, right? Over CPI. We look at CPI, the Consumer Price Index, but PCE data is much more of what the Federal Reserve uses to gauge inflation, right? So, So this is a massive report, chat. A massive report. So again, today's personal consumption expenditure inflation report is here, and all eyes are on this critical gauge of inflation. The Federal Reserve's preferred tool for tracking price stability in the economy. It's released monthly by the Bureau of Economic Analysis. The PCE report provides a close look at the movement in prices for goods and services purchased by consumers, stripping out food and energy costs to highlight core inflation. Again, core PCE 0.3% is what they're expecting today. Today's numbers are essential for understanding the trajectory of inflation and consequently the Fed's future moves on interest rates like next week. Unlike CPI, which captures more frequent and volatile price changes, PCE covers a broader range of consumer expenses, providing a more stable and comprehensive measure of inflationary trends. This means that markets, policy analysts, and traders alike consider today's PCE report a highly reliable indicator of real inflation pressures that we currently see in the economy. So why does it matter to you? The report will have immediate implications across markets. The inflation at the forefront of economic policy decisions. Today's data could influence Chair Powell's future approach, whether he chooses to continue, cutting rates, hinting at rate hikes, signals for a pause, giving markets a breather. Whatever he decides to do, they're overwhelmingly expected 25 basis points next week. On the 7th is when the next rate decision is, on the 7th for the Fed. But for investors, traders, and businesses, this report is more than just numbers. It's an indication of whether we can expect more rate cuts or not, or if we're going to see anything better. So whether inflation is showing signs of cooling or continuing upward pressure, today's PCE report will fuel market reactions and impact the dollar, bonds, and equities. So again, just be ready, chat. This is a big report. We got 9 minutes. Be prepared for volatility as market digests these numbers. And we're going to cover it as soon as it happens, chat. It's literally as soon as it drops. We're going to be here to cover it. Hey, what's up, John? What's up, Dean? What's up, KD? What's up, George? Plus. And so again, let me know what you guys think. We got almost 1,000 watchers right now, about 1,000 people. We'll have much more than that when the report actually drops. We got 8.5 minutes here. Chat. Markets are mostly down over the last few days on earnings. AMD, Microsoft, Meta, Google all dropped earnings. Most of them beat. So what's interesting is that most of the earnings this season have beat expectations in the Magnificent Seven. Most of them had better than expected EPS, revenue, and guidance. But again, it kind of goes to show that you can't just look at earnings. Most of these stocks are down from earnings. Meta, Google, Microsoft, AMD certainly is down. And so it's not always that predictable for earnings like that. But still, time is here. We got 8 minutes, chat. Indices consolidating for some type of pop here. Will we go up or down on this report, chat? Up or down on this report? It's time. I have no idea. What do you think? I have no idea either. You and me both, brother. We also have the jobless claims report. So again, we also have the jobless claims. So we also have the jobless claims report. So today's jobless claims report is about to hit as well, and it could be a game changer. Released by the U.S. Department of Labor, this weekly report reveals the number of people who filed for unemployment benefits for the first time, providing one of the most up-to-date snapshots of the labor market. And with all the other stuff going on in markets, with 7 minutes left until this report, as we approach the end of the month, today's numbers are highly anticipated because they come on the heels of recent Fed statements and economic indicators, giving markets a closer view of employment health and possibly foreshadowing the November jobs report tomorrow. Jobless claims aren't just numbers, they're a window into economic stability. Rising claims could indicate a cooling job market and economic softening, potentially giving the Fed room to pause on rate hikes over cutting rates, which is what's widely expected right now. On the flip side, low claims would signal ongoing job market resilience, potentially pushing the Fed to stay on course. With what they're currently doing for traders. Heightened attention, jobless claims have historically been reliable signals for recessionary risks as well, which makes today's report all more impactful. Today's report also matters for its broader impact on consumer confidence, spending, and GDP, which showed up yesterday lower than expected at 2.8%. It's a vital piece of the economic puzzle: labor market strength to inflationary pressures, linking and wage growth, corporate earnings, all that good stuff. So if jobless claims come in lower than expected, market could interpret it as a sign of continued economic resilience and less of a need to cut rates. Overwhelmingly right now, the Federal Reserve is probably going to cut 25 basis points next Thursday. And you can kind of see those odds here. 96% expecting a cut, only 3.9% expecting a pause. So, yeah. We're here, guys. We got a little bit over 5 minutes, just about 6 minutes left until this report drops. They're going to keep cutting, just going to cut slow or fast, depending on the data. Yeah, we'll see. I think 25 basis points pretty likely, but I also think tomorrow's report over everything else, as well as today's report, are going to be impactful, right? Like tomorrow's report is going to be important, right? Tomorrow's report is going to be important. Non-farm payrolls and unemployment is a very big report, a very relevant report. No. All right, guys. Yeah, so we got over 1,000 people here. The market's steady pushing up. Hey, I love you, buddy. Have a good day, dude. I love you. Have a good day, guys. All right. Regardless of what the numbers are today, check back in a week for them. Well, maybe they're going to keep cutting, just going to cut slow. Yeah, maybe. Thoughts on Apple earnings? I think Apple earnings are a huge earnings release in markets right now. Much more, obviously, than Amazon, which also releases at the same time. So Apple and Amazon's earnings call are right around the same time. Irregardless, how dare you use that word to me? No, I'm just joking. 4 minutes left, chat. 4 minutes. We got 1,100 people here watching. All right. Yeah, here we go, guys. PCE inflation data coming live for you real soon here, chat. Real soon. NASDAQ's all the way back up to the 200 EMA here. I'm going to short this real quick. But again, we have 4 minutes left. Chat, 4 minutes left. All right, thanks, Shake. Yeah. All right, guys. PCE inflation data dropping in a couple minutes here. Look at this big pop up. So we're going to short into this pop. We got 3 minutes left. We are going to cut this for sure ahead of this report. Nice job covering economic data. Hey, thanks so much. We try over here. We try. We got 3 minutes left. Like, I think we tend to chop ahead of this report, so I'm shorting here, but I gotta be willing to cut this within a minute or two. There we go. All right, guys, 3 minutes. 3 minutes. Yeah, irregardless is not a word. Have we seen an uptick in jobless claims? All right, guys, we got 2.5 minutes left. Chat, 2.5 minutes left. What will the PCE report show? Give me your last minute predictions here, guys. Give me your last minute predictions. I'm going to cut this. And then we're going to hold one. We got 2 minutes left. 2 minutes left. Meta's actually rebounding big today. Again, Meta's actually rebounding pretty big. Again, the report drops very soon, guys. Hit the live button next to the play button. Make sure you're fully caught up on stream. I appreciate it. A minute and a half, guys. A minute and a half. Again, give me your last minute predictions. I see some people saying 0.2, 0.3, 0.2, and then 205,000 jobless claims, 0.1%. What's the nuance we should expect with higher low numbers? Well, high numbers signals higher inflation problems, which is not what we want right now, especially with all the strong payroll numbers. It's just not what we want. We want lower inflation numbers here, so we want a lower report for markets for sure. I'm gonna go ahead and cut this. We're down maybe 75 bucks on this trade right now. Yeah, we're gonna just get out of there. So we ended up losing money, but it's just getting too close. We got less than a minute now, and I just don't want to risk that. So all right, guys, let's see what we get here, chat. We got 1,500 live viewers right now. Less than a minute. Did we put it in sub-only mode? No, we did not. If you haven't already subscribed, hit the notification bell. I appreciate the love. Here we go, chat. Here we go. I'm going to put the SPY chart up just to keep a big chart up here. I'm going to put the SPY chart up. Here's the SPY. It's on a 1 minute chart. And then here's the Q. On a 1 minute chart also here. Let's see what we get. All right, guys, 40 seconds. 40 seconds. Massive report today. Massive report. 5 seconds. 5, 4, 3, 2. All right. And employment benefits are out. The numbers actually aren't out yet, though. All right, jobless claims showed up at 216, lower than expected for jobless claims. 216 versus 229 expected. Again, 216 versus 229 expected. The PCE report is actually a little bit late right now. PCE came in higher than expected at 2.7% for year over year. Month over month came in at 0.3%. 0.3% month over month for core PCE, 2.7% year over year for core PCE. Jobless claims came in lower than expected. So all of these things signal a stronger economy, but potentially stronger inflation pressures than expected. That's what this report shows. Okay, again, guys, 2.7% for core PCE versus 2.6%. Regular month over month came in as expected today, chat, at 0.3%. As expected, 0.3% for core PCE month to month, 0.3% versus 0.3% expected. The only one that came in higher than expected was 2.7% for year over year core PCE, but mostly a flat PCE report, but slightly higher than expected, specifically for the core year over year PCE data. Now, we also had jobless claims unemployment filings come in lower than expected, so less people filing for unemployment week to week. All of these things signal a stronger economy. Okay, but also less of a need to cut rates. I don't think any of these are like too big, if that makes sense. I don't think any of these are necessarily too big or too much higher than expected to cause any type of fears in terms of no rate cuts. I still think we're going to cut rates on these numbers, and as long as unemployment and payroll numbers come in somewhat reasonable tomorrow. But yeah, so again, everything showed up as expected except for specifically core year-over-year PCE data, which came in at 2.7 versus 2.6%. Core PCE month over month came in at 0.3 versus 0.3. Last time it was 0.1, so it did come up with an uptick from last time. Year-over-year 2.7 versus 2.6%. And again, the jobless claims numbers showed up at lower than expected at 216 versus 230. So jobless claims lower than expected, 216 versus 230. So that shows a stronger economy than expected. Here's all the numbers right here. But yeah, so far so good. Market hasn't really reacted a ton. It ended up dropping initially from this report and then bouncing back pretty quickly. Yeah, I mean, this definitely doesn't mean a hard landing. This shows stronger economy than expected, not weaker. Higher inflation index, lower jobless claims. So basically less people filing for unemployment, more people working, more people spending, and higher PCE index year over year, but flat mostly. So that's what we showed. 0.3% versus 0.3%. Yeah. You know, again, though, the problem is inflation. I would rather PCE be lower, and it was slightly higher than expected. So I'd personally rather it be lower, and it was slightly higher than expected here, Chad. So, I mean, I wouldn't necessarily call that good, but it does signal a stronger economy than expected here. So, yeah, Robinhood's popping up. Again, tomorrow we have non-farm payrolls and unemployment, which really is kind of like the biggest economic report we have this week. Yeah, so again, guys, let's see what we get. Stick around. We are going to trade live like we always do. You know, yeah, stick around. We're going to trade live like we always do. We've just got so much stuff going on in markets right now. But inflation data is out. You can kind of see it on the bottom of the screen. Let's get ready to trade some of this, huh? Got a dip right at that 200 EMA. I'm going to short this. I'm going to add to it here. There we go. See if we can fill some of this downwick pressure. We're going to take our risk. I don't mind resetting this account too if we need to. Here we go. Here we go. So we made some money here, and then we ended up retracing even more, but we're going to short right into that as well. It's a risky time, though, to take this position, but that's all right. There we go. All right, so we made some money here so far. Now we're down. I'll add some size right back to this. I want to see if it retraces this big candle wick like we've been targeting a lot. Look at that. There we go. There we go. All right, so yeah, we just made 300 bucks there. Again, same concept. Remember what I said, chat. Remember what I said. Look how consistent this is. And I'm not saying this is always going to work. I'm certainly not saying this is always going to work. Look at the big candle wick. What did I say what happens a lot? We fill at least a part of that gap. Same thing happened here. Big down wick. What happened? We filled part of that gap. We ended up going up afterwards, but it's just a strategy I've been using. Robinhood is pumping up some here. The data came in neutral for the most part. Neutral. Mostly neutral. And look at that big candle wick down fill. So again, pretty predictable, honestly. Yeah, all good, Dean. No worries. All right, chat. That is the PCE inflation report. Again, if you haven't already, check out Top Step. Top Step Funds Traders. This is what I'm on right now. No PDT rule in futures. You can day trade short, buy market, sell market. Very similar to day trading stocks. You can see it's a lot like day trading stocks, but there's no PDT restrictions, and these funded account programs are allowed where they give you a demo. They test your skill with the demo first. If you pass the test, they fund you. If you fail, you only lose what you pay for it. In this case, it's $49 a month. It's kind of what a regular demo account with real-time data costs anyway. But if you pass this challenge, you get $50K in funding, 90% split. In the futures market, you can day trade the S&P, the NASDAQ, the Dow, the Russell, gold. Some currencies patterns are super similar to blue chip stock patterns, but there's no PDT restrictions. Great way to test your skill, test yourself. And most day traders lose, and so it makes no sense to fund your own account, especially in the beginning. Try this first. If you lose, it's not the end of the world. You're out $50. Here's the link. They're an affiliate or sponsor of mine. I'm biased because they pay me money.
But if you want to check it out, understand CFTC 4.41 hypothetical or simulated performance have limitations, guys. We did get that big gap fill, wick fill. Look at the QQQ and the SPY break here, chat. Look at the QQQ and the SPY break. A lot of this is driven by Meta retracing some, Amazon retracing some. Amazon's down to, yeah, Amazon's retracing some, Meta's retracing some, Apple's retracing some. What else dropped yesterday? Microsoft's down a little bit. They're all at some pretty big support levels, though. So I'm going to buy. Kind of a risky position here, though. Don't copy me. I'm not an investment professional. I have no freaking idea what I'm doing. Chat, do not copy me. I'm sure some of y'all would agree with that. Alright, somehow we ended up making money. And now we're flat on the day after losing 500. After making 500, losing 800. Making another 500 back, and now we are flat on the day. Yeah, the only thing I'm looking at is like we got a bunch of historical support levels right around this, but who knows. I think if it does break down, it's going to downtrend longer term as well, but I genuinely don't know what we're going to get. Starbucks, yeah, I mean, Starbucks did horrible for their earnings. Starbucks, to be fair, though, has been flat for a year straight. Starbucks, to be fair, has been flat for 6 years or 5 years straight. Starbucks has been flat since July of 2019. It's literally right where it was in July of 2019. And so I think when in doubt, zoom out. If you're wondering why Starbucks isn't just breaking down, it's because it hasn't really done much in the last few years anyway. So again, we're now dipping down a little bit here, chat. Look at that big drop. Apple right at the previous closing price. We did get that bounce that we were talking about. Look at that bounce. So we called both directions short term here. Somehow I've gotten decent at predicting very short term price action. Look, there's the bounce. You know, I had somebody make fun of me the other day. Like, you know, again, the one biggest sign of a rookie trader is somebody that makes fun of others because they don't trade exactly the same way. Right? Like, everybody trades differently. You can have good traders, bad traders. You can have good strategies. Most strategies can work under the right conditions. And I'm not going to claim that just because I can't make something work, that nobody else can either. Right? But for whatever reason, you get people that get really, like, sold on strategies. And so that's all they talk about. And if you don't trade their strategy, they get really emotional and kind of weird. You know, I see that a lot. And again, the reality of it is people have different personality types. Like, some people are going to be better at one thing. Other people are going to be better at the other, right? And so, you know, you got to just go with what you're good. You got to just do what you're good at and figure out what you're good at. And that takes time. That takes testing. That takes back testing strategies and stuff. No, you don't have to trade every day, Ryan. But somebody was making fun of me because I look at blue chip stocks or index funds or all kind of stuff. Like, I'm looking at, you know, I'm looking at where a lot of these stocks are. Like, a lot of these stocks pulled back to the 200 EMA and the volume weighted average price. And that's a big, like, milestone level. And so when we pull back to that spot, and when a lot of different stocks pull back to the same spot, it's just probable for us to get a bounce sometimes. Now, it doesn't mean it's going to hold. Like, sometimes we get an initial bounce and then it just turns back around. And that's kind of what it looks like now. But we made our money on the upside already. Yeah, Peloton's up big. The problem is it's down so much over a long period of time. It's up to 830s. Problem, it was at almost $100 a share in 2021. So, I mean, it dropping from 90s down to 2 and then bouncing back up to 8 is not that impressive. We'll see, though. I think there's probably a lot of bag holders on Peloton right now, so I'm sure they're getting excited. Again, guys, what a lot of people have to understand is that nobody freaking knows. Nobody freaking knows which way we're going to get anything. And so the people I see that claim to know the most about what's going to happen definitively, usually I'm just really skeptical of. And there's the bounce back. Yeah, people have different risk tolerances, different strategies, different strengths and weaknesses. And so everybody's different. All right, we're popping right back up. Might short this, to be honest. Look to chop for at least a couple minutes, but who knows, man. We might start to run on the upside, too. We have to take risks in this challenge account, so it's just a little bit different. And we're going to trade on our actual funded account at the open. But if it looks like I'm just kind of clicking buttons, I kind of am. But yeah. But we got to kind of take risks. My goal is to make $1,500 in this account today. And then if we do, we're basically there. Alright, we're green here, but who knows what we're going to do. We did get a little pop. Oof. Definitely you don't love to see it. I had to limit my risk real quick there, so we cut a large chunk of the position just because we were down a lot more than we ended up losing here, and yeah, even if it goes in my direction, the amount we pushed up prior to it doesn't make it worth it. Yeah, I gotta cut it. So we actually lost much less than we could have. And it looks like it was the right move. We'll switch to our actual funded account. We've been playing on this one too much. All right, so here's our actual funded account. You can kind of see the express on the top right. Figure out what we want to do on the rest of this. Yeah, so we're trying to get some good trades, but the whole NASDAQ direction is kind of flat right now. Double top up there too. And look at a lot of these index funds turning back around. Small caps jumping. Yeah, I mean, of course I wouldn't copy me. That's not really the smart move. We're getting a very flat, choppy range leading into this report. Now, I don't know if payroll reports coming out might influence things or what, but yeah, just don't copy me. We're getting a lot of choppy, like, range. We're so flat here, though. We're going back and forth and back and forth and back and forth. It looks weak now, though, to be honest. It looks like it's going to break down. You predicted the chomp? Well, kind of, I guess, but... see if we get some better momentum now, though. Risk reward ratios have to be considered simultaneous. Inflation is a bit sticky. Yeah, that's how it goes. Yeah, we'll try to get some good trades in there. But the market's just flattening out. Not really looking the most favorable. We're at a big support level, and so we are at like a big historical support level. Microsoft earnings were better than expected EPS and revenue, but they still didn't perform good. They ended up dropping on it. Yeah, we're just getting a really choppy trend, in all honesty, right now. There's the last 5 or 6 candles have not been what we necessarily want to see. Like, look at this. We've just kind of going up, down, up, down, up. That's it. That's all we got. And again, maybe the market's waiting for the opening bell. I tend to do better at the opening bell too, so maybe we'll get some better results at the bell. But for now, it's just kind of boring. Chop, neutral, you know. The only way to really attack this is to buy the bottom, sell the top, which is fine, but it's boring. We'll probably trade some micro contracts here. I'm gonna short one, and we're gonna take some longer term micro contracts in our funded account here. Yeah, we're up $7. We'll add some to it, see if we get a retracement back down. Try to build up a cushion here first. But we are kind of rangy. I wouldn't mind seeing us break down a little bit here, but yeah, the market hasn't been reacting at all. I don't know if it's just specifically because of the election looming or the rate decision next week or payroll numbers and unemployment data tomorrow, but the market's been really underreactive for markets. Just hasn't really done much, to be completely real. All the economic data, we had GDP yesterday, very small reaction. PCE data today, very small reaction relative to what we normally get for this stuff. Payroll numbers tomorrow will be big, and we'll probably get a big brash reaction for it. But I just think heading into the election is what's causing a lot of apprehension for everything, for data. All right, so we're just gonna lock in some profit here. Small little baby trade, but we're just attacking chop. Do you think there could be a lawsuit against Supermicro Semiconductors? Maybe. There could be a lawsuit easily. The question is whether they could win, and that's a different story. I don't know. All right, so we just made 30 bucks, 25 bucks there. Not a bad little day trade. Try to chip away at some of this. And again, the good thing about Top Step X is that I can trade these micro contracts. You see when I'm trading my actual funded account, I'm trading these micro contracts and there's no commissions. And so I can take these little tiny $25 like trades and make money on it, you know. I mean, I wouldn't really call this scalping. I might have referenced it as scalping, but this is just a longer term. Like that last trade lasted a few minutes, so it's not like scalping. Usually, it depends on what you define it as. I'm usually looking at like 10-15 second trades, but this last trade was a little bit longer term. We did start to push towards the bottom of the trend. Scalping's not anything under an hour, Passion. That's incorrect. But again, it's people can define it as a lot of different things, man. But an hour would just be day trading. Most day trades are under an hour. I wouldn't define most day trades as scalping. I think the obvious trend right now is on the upside, but I also think it could fake us out a lot. And so we're going to try to let the opening bell play out first. Well, yeah, I'm definitely in and out quickly for sure. Not disagreeing with you there. A scalp under 1 hour is scalping. Well, I disagree with that one. Let's ask AI. Most trades lasting anywhere between a few seconds to 5 minutes is what most people would consider it. And so, yeah, an hour is way too long of a time frame. Like, doing something for an hour is certainly not that. But who knows, man. Yeah, I mean, chat, we're just kind of poking around over here. Everybody's welcome here as long as you're not too judgy about everything. Like, we have some fun. Top 3 worst trader of all time ever in the world right now. And so, definitely top 3-ish worst ever. Don't copy me. Yeah, so again, I think the obvious move is on the downside right now, but who knows? Target rate probability. Yeah, so let's see if it changed at all for the economic reports. It might have. So 96.1%. It's kind of what it was prior to this report, though. 96.1, 3.9%. So yeah, it didn't really change at all. Tomorrow's report is probably going to be a much larger influence over everything. Non-farm payrolls and unemployment tomorrow are expected at a very low amount relative to the last few results. Last time payroll numbers came in at 260s or something crazy. Tomorrow they are expected at 111,000, basically 110, which is very similar to what the prelim non-farm employment change data came out or was expected at, but the prelim payroll data came in at 230s. So it came out much bigger than expected. They're much bigger than expected. So we'll see if tomorrow's non-farm payroll numbers do that. We also have the unemployment rate. It's expected tomorrow at we also have Chicago PMI today, so we do have something else coming out today, but unemployment tomorrow is expected at 4.1%, chat. 4.1%. So we'll see. Yeah, big rebound back up again here. Let's see if we get anything better. Do you think if non-employment comes in higher than expected, there's a chance for the Fed to cut 50? No, I don't think a 50 is a chance. I think if payroll numbers come in really high, like really, really high, I think then the Fed might pause. You got to understand, like the way these works is the stronger the economy is, the less likely the Federal Reserve is to cut rates because of the bigger inflation fears that happen. So if inflation fears are there, the Fed's less likely to cut rates aggressively. If inflation fears aren't there and the economy shows signs of weakening, the Fed's more likely to cut rates more aggressively, not less aggressively. And so it's nuanced, but the weaker the economy is, the more likely the Fed is to cut rates. The stronger the economy shows, the less likely the Fed is to cut rates aggressively. Now, they're still probably going to cut 25 basis points. I don't think a 50 is on the table yet, though. So I just don't think 50 is on the table. Anything could happen, though, but it's less likely for sure. No further cuts this year. I think we cut next week, James. It's 96% chance. Again, people have to get back to understanding how to predict economic data, man. For whatever reason, bro, I don't know if it's like a gambling nature or confirmation bias or what. But for whatever reason, bro, everybody, like, I always see a percentage of people that just bet wildly against the very, very predictable nature of this stuff, dude. Like, it's 95 to 5% chance that we're going to cut rates 25 basis points. And so telling us that we're probably not going to cut this year is actually the opposite. We're almost certain to cut this year again. Like we're 95 to 5% likelihood that we're going to cut rates again in a week in November. And so betting that we're not going to cut rates again is going way outside the expectations. And for whatever reason, and this is almost always right. Like, if you look at this report 5 minutes before the rate decision, it's probably right. It hasn't been wrong in a year plus, And so people just got to understand, like, I get it. People want to be really contrarian. And I get it. They want to go against what everybody else says. But when it's something that's incredibly predictable like this, going against it is dumb. It's not smart. It's just not as smart. Now, there's always chances that we show something different here. Like, there's always chances that we don't cut next week, right? What that would look like is if tomorrow, as an example, if unemployment was low, right? If unemployment showed up at like 3.9, 3.8% tomorrow and payroll numbers showed up at 260s, that's a situation in which, it's arguable that we might cut rates, or that's a situation in which, we could be heading towards a pause, right? But that's a low probability thing. It's just not what's most likely going to happen. And again, for whatever reason, I see all these people predicting all these things that are just not really very likely. And you can predict them, but most of the time they're wrong. And again, like an example of this is like 3 or 4 months ago when a cut was pretty freaking unlikely. We had a bunch of people predicting a cut was going to happen, and they were going to bet that market was going to shock the world and cut, and then we didn't, right? Why? Because it just wasn't super probable. It's not something that people should be trying to predict. And it's kind of silly if you really want to boil down to it, but hey, you just got to understand, man, like, these analysts, these big banks have a lot more money than we do. They have a lot more weight. They have a lot more knowledge. They have a lot more data to look at than we do, right? So we could try to predict them correctly, but these analysts know what's up. They know what's about to happen. Like big money knows. Yeah, but I'm not talking about you're talking about the economy and then you're referencing stocks, which can be related. But what I'm saying is that are you the one that said we weren't going to cut rates again this year? No further cuts this year. Yeah, I mean we're going to cut in a week from now. Pretty probable at least. I mean it's not 100%, but it's 95. And if anybody watches this stream regularly, you see me do this dance leading up to the rate decision every freaking 6 weeks. I do this dance with people where I tell them what's going to happen. They disagree, and for whatever reason, people just want to be contrarian, man. I bet you $1 we don't cut rates. I'm not going to bet money because that's, that just goes against something I would ever do on YouTube, is bet people money. Now, what I will say is that if we do not cut rates, I get to call you dummy for a month. And I'm guessing you're just never going to show up here. And it's a pretty good bet. Look, you can call me dummy for a month and I'll have to respond to it. As long as you're respectful outside of that, sure. That'll be if you want to bet on that, sure. I bet you we are going to cut rates. I bet you we're going to cut rates 25 basis points on November 7th. Missed the data drop. All those numbers look bad for cuts. Correct. So they don't look bad. They're mostly expected. 0.3%, 0.3%. Inflation was flat month to month. Year over year, it went up a little bit, but nothing wild. And jobless claims showed a stronger economy than expected. So yes, a little bit less of an argument for rate cuts, but you still have to look at the probabilities for banks. How will the market react if no cuts? I'm not sure. Nobody knows. How to find out what the big money is doing? It's on the record somewhere. Well, you can look at this right here. This is what big money thinks. And this has been right every time for a year straight. If you look at it 30 minutes preceding the report, this has been right over and over again. Again, we got 8 days until this report goes live. Again, I bet you it's going to be 25 basis point cut. I don't run away from my opinions. Yeah, but I mean, James, just to give you some context into this, every single time we get a Fed meeting, right? Every single time, if it's really polarized like this, for whatever reason, people pick this number here. They pick the super unlikely scenario. It's 95 to 5%. You're going with the 5% likelihood, which is fine. It could change. Listen, this could change certainly in the next week. Right, especially with payrolls and unemployment tomorrow. This could change certainly in the next week. And again, it would look something in which payroll numbers show up shockingly high tomorrow and unemployment shows up low. If both of those things happen, and I think they're more plausible to happen leading into the election as well, to be fair, right? So I understand it more so than I understand previous contrarian predictions that I get here in the chat, right? I really do. Like, I understand that prediction more than some of the other ones. Like a couple months ago, people were saying we were going to cut rates earlier than last month, and they were doing all these wild predictions, and they were making live streams like, we're going to cut rates, it's the biggest FOMC meeting ever, and then we paused. And so I see people make these contrarian bets, and to be fair, I understand your bet a little bit more than others, because I do think if unemployment and payroll numbers show up showing economic strength tomorrow in like a shocking way, we're much less likely to cut rates, right? But even still, I think even if payroll numbers and unemployment shows a strong economy tomorrow, I think this is going to go up to maybe 35. And so I still think even in that situation, it's still more probable that I'm right with the 25 basis point cut. I don't think this pivots that much in that short a time, but it could with the economic data that we got going on. right? That's my stance on it. And so you could be right. And if you are, I'll eat my words. But, you know, you're betting on bad odds at this point, you know, from a statistical standpoint. But it's all love. You know, we got some economic data coming out between then. I'll tell you this, after tomorrow, if the numbers are mostly flat tomorrow, 25 basis point cut is incredibly likely. Incredibly likely. But we'll see. Yeah, I'll have to call you a genius. Sure enough. Deal. Well, you're not the smartest guy, Carpenter. You're number 4 because I'm top 3. All top 3. All right, guys. Market is so freaking boring and flat right now. It's not doing anything. This is not fun. Oreo, if you think I'm going to say anything about anything like that, you haven't been paying attention, brother. And really, I'm going to delete the comment altogether. Please don't talk about super controversial stuff like that. All right, we're so flat in markets right now, guys. We're so flat in markets. We'll see if we get anything better. I'm waiting. Tomorrow's non-farm payroll and unemployment report is massive. So be ready. Honestly, I'm surprised like we got as many people here. It's Halloween. I'm wondering what people are going to be doing today. Are people traveling? Hey, John, can you explain the hammer candle I was talking about earlier? Yeah, sure. So, and again, I'm going to give you guys like a little bit more info on this. Okay, so. All right. So, just to clarify, can you see this? Can you see the question mark right now? Here's a test. Can you see the question mark right now? Can you see that? Could you see the question mark before I go on to explain things? Yes? Okay, good. All right. So, all right. So usually you look at candle wicks to identify strength or weakness, right? But to be honest, lately they haven't been the most accurate thing, right? And so a candle wick is something like this. That's the candle wick. Now, in theory, historically and by common trader knowledge, when you get a down wick like this, it usually means upward price action. Why? Because the candle has to go down and then get shot up like that to form the candle wick, which is what we call a hammer candle, right? Why? Because it kind of looks like a hammer, a sledgehammer. Now, trading is all about getting into a flow state of things, you know, so certain things work in certain periods of time in markets and other things don't. Other things work in other periods of time and some things don't work, right? Currently, what I'm specifically seeing, and I'm going to preface this with I have no freaking idea what I'm talking about. I might be wildly wrong about anything and everything. Don't copy me. I'm not an investment professional, and I'm not liable if you lose money. You know, top 3 disclaimers in the world. But what I've been seeing a lot recently is I've been seeing the candlestick form here with the candle wick, and then I've been seeing it kind of fill that gap to the downside, at least 50%. 50% is what I'm seeing recently, right? Where it'll kind of look something like that, and then sometimes it'll go right back up, and then sometimes it'll go right back down. But when I get a big long candle wick like this, most of the time it's going to fill the wick. It also does it on the opposite. So if it looks like this, right? Recently, the next candle will look something like this. Recently. And so on a very, 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 very short-term perspective, I get a nice little candle that I can take advantage of scalping it, right? That's what I've been doing recently. And that's really what, but again, most of the time traders are going to interpret candle wicks as this is bullish, right? But it all has to do with long-term trends, and there's a lot of nuance behind it. And again, I have no idea what I'm talking about. Any time frame, really. No, I didn't see that, Oreo. You know, what I want to teach people to do, though, is play the freaking long game, guys. Like, play the long game, man. You know, like, people take the short, like, markets, like, you know, people might make fun of me. Maybe other channels can get more views. Maybe they think I'm a terrible trader. You know, maybe like I could have made more money short term or whatever it is. But the reality of it is, the way I built my channel is important, right? Like I tell people actively, I have no idea what I'm talking about. Don't copy me. I don't sell a course, and I could have made so much more money doing all these different things, right? What happened to Trade Trades is that Trade, like I remember the symbol was ZKIN. And I was an influencer covering AMC and GameStop when he was, right? It was like him and like me and a couple other people were covering it, right? And some of them went really heavy into AMC and GameStop. But the problem is a company called ZKIN sent all of us emails. And I don't really know them, but I know they sent a bunch of YouTubers emails and stocks. And they said, hey, if you promote our stock, we'll pay you $10,000, right? And that's the title of the email. And I remember getting that and just being like, hey, I can't comfortably do this. I can't pump up a penny stock for profit, right? I just can't do it. And not only is it morally wrong, but also like liability ridden. Like I'm good on that. But a lot of these guys did, including Trey. You know, and you know, I knew some of these guys did because I saw the email myself. Hey, we'll pay you $10K to promote blah blah blah. ZKIN is what it was, I think. And then I see a lot of these big YouTubers saying, "Oh, ZKIN, the next greatest stock ever," and I just think he never really came back from that. You know, once that was found out, he never really came back from it. You know, and again, the problem is like you have to play the long game with stocks, right? Like the problem a lot of these guys faced is that they went so big into AMC and GameStop. You know, and again, no offense. But it's GameStop, right? GameStop's cool. It made a big, crazy run. But GameStop's not going to be the best. Like, GameStop's not going to be the biggest market cap stock in the world, right? Eventually, it's GameStop. And eventually, all things like that lose steam. And so it's important for a lot of different aspects of life is to diversify. Like, diversification. Like, diversify into a bunch of different stuff. Like, you see me, I cover stocks, futures, economics, everything like that. But you got to play the long game here. If you play the short game, you might make more money short term. And if I wanted to sell a course or sell our own service or claim to be some guru, expert, genius, top 3 in the world, I probably could have made more money. But I might also not be sitting around here, and I might be over here just, you know, freaking diversify. Don't do it. Real, don't do it. And like, yeah, I make money. I make money on the back end, and so it's not like I'm self-righteous, good old John. Like I do this to make money, like everybody else. But the way I make money is by telling people I'm top 3 worst trader of all time ever in the world, and I don't sell a course, and I don't even claim to be a good trader, and I still make money on the back end from it. And so I think that's the smartest way because, you know, nobody can get mad at me because I'm telling people don't copy me. I'm terrible. Again, my job is to set the expectation real low, and if I outperform that, great. But if not, you know, who cares? A lot of traders were the kids that ate the marshmallows instead of waiting for 2 later on. Yeah, for sure. Yeah, I could never pump penny stocks. It's just not worth it. And Trey seemed like a good dude. Like, I don't really have anything against him. The problem is that when you don't freaking know, is what it is, right? Like, I could tell everybody to buy a stock. I don't freaking know what's going to happen to these stocks. And so I'd feel bad because a lot of these stocks are super obscure, super volatile, super variance heavy. You know, I'd feel bad telling people to buy some of this stuff, man. Like, regardless of anything else. And so when you base your whole channel around telling people to buy one specific stock and kind of riding the coattails of Roaring Kitty, you know, some of them have longevity, some don't. But yeah. Yeah, and the whole steroids thing, like, I'm not, if you want to take TRT, if your testosterone's going down, like, I want to have one more kid, so I'm not really a big TRT person, but maybe after I have a kid, if I, you know, I might TRT it up, I don't know, right? It depends on what my levels were. The last time I got my levels checked, I was like 600 and something in my 30s, which is good, right? Like, I don't really need more than that. And I don't know what he's doing over there with all kind of stuff. I'm just talking as a 30-something-year-old, you know. All right, chat, we got 7 minutes left. 7 minutes. In his first year working out. Yeah, you don't even need to in your first year working out. Like, first year working out, you put so much gains in. My first year working out, I probably gained like 20 pounds. I really did. I was like 140 when I was in my 20s. 140 pounds in my early 20s. I remember the first year I started working out. I gained like 20 pounds naturally very quickly because I was so skinny. I just ate more. You know, when you work out more, you eat more. And so you don't really need to do all that stuff. 5 minutes left, chat. 5 minutes. Market's so boring right now. The only way to really attack this is choppy behavior. Amazon earnings today, Google earnings today too. And some dips. All right, guys. Got a little downwick pressure here. 4 minutes left until market opens. Nvidia's fallen down a little bit. It's been falling down since big tech earnings came out anyway. Yeah, I mean, market's very boring, flat. I mean, Q just dumped a little bit. SPY just dumped a little bit, but everything's pretty boring. Apple's testing lows, though, so Apple just cracked lows of the day. So that's kind of what dragged everything down here. Yeah, Apple cracked lows. Apple's still falling. It's at 228 right now for Apple. So Apple's still falling down. Supermicro semiconductors falling. All right, guys. We're only here. We're almost here. Two minutes. Market's very boring, very flat, not doing anything. I put a 1 minute chart up. Maybe we'll get some better cool stuff here, but it's so boring right now. All right, 1 minute left, chat. 1 minute. Nvidia testing 200 EMA. I think the whole market's quiet though. They're just waiting for stuff to go down. All right, guys, 30 seconds. 30 seconds. Market's falling a little bit now. Just a little bit. Yeah, I feel bad, man. So I was helping a friend train for a competition. And, all right, there's the opening bell. All right, so far NASDAQ's fallen, but again, we're going to give it some time here before we do anything. All right, so look at this big red action. So we're day trading on Top Step, guys. Again, if you want to check out Top Step, here's the link. There's no PDT in futures. You could day trade short, buy market, sell market. No PDT rule in futures. Here's the link if you want to check them out. Great way to help support your boy here in this channel. Biggest edge on Top Step X is that there's zero commission and no PDT rule in futures. You could day trade short the S&P, the NASDAQ, really what the SPY and Q-Track patterns are super similar to blue chips. Most day traders lose. If you try to fund your own account, you're probably going to lose it, and that's objectively true for most traders. Doesn't matter what course you take, who you follow, most day traders lose. It's a lot cheaper to lose on Top Step. It's the most legit funded program in the world. It's kind of like a souped-up demo account with some risk. And if you lose it, you're out $50 versus losing thousands funding your own account, most likely. They're an affiliate of mine. I'm biased, but again, it really is the best of both worlds. Limited risk, but if you're funded, you get a 90% split. Here's the link if you want to check it out. We're waiting for some good action. That's a big dip, though, at the open. Big old dip. I'm going to buy this up now, I guess, but it's risky for sure. We're already up 25, 30 bucks. What a drop, guys. Usually I like playing that extension, but man, just getting punished in this thing this morning. Luckily, we're trading micros, and so our commissions are pretty small. We'll add some here, but I gotta be careful to let it roll. Definitely trading Bad discipline, too close to the open. We're going to have to play catch up after the opening bell, it looks like today. Yeah, just lost 100 something. Way too close to the opening bell. I'm done for attacking it in the first place. I'm actually going to switch and just let this. We're probably down like $100 because we had already built up some profit in this one. I'm going to switch accounts here. I'd rather just not trade too crazy in this one this morning. And I'm just going to let the opening bell play out, see if I can redeem myself. I think that was a dumb trade to take. And again, I think I got unlucky. I think we dropped a lot. But yeah, that's a huge drop at the opening bell. Big red candles. NASDAQ, Dow, NVIDIA all falling down. Apple cracking the lows. Just not the time to buy it, I think. Netflix hasn't really moved at all, though. I'm looking at Meta also and AMD. Meta's trying to creep back up, but man, look at this dump. Wow. We will be back later on, guys, for Apple and Amazon earnings today. So we do have a bunch of big earnings reports this morning. Or this afternoon, I should say. There's a little bit of a balance, but yeah, we gotta wait. Amazon, Apple, Intel, all today. We got Apple earnings coming out live soon. All right, so a lot of big drops at the opening bell. Some rebounds back up. I'm still going to trade micro contracts for now, I think, though. Hey, John, respectfully reminding you that you were trading too close to the opening bell. 100%, yeah. I say it every day. I got to limit my risk. Yeah, it's hard when you're running a stream, to be honest, though. Like, it really is difficult when you got a bunch of people watching you. Everybody's waiting to see you trade, but it's all good. My best trading, guys, so my best trading is really like swing trading and investing. For sure. Yeah, we're going to stream both earnings. I think it's really bad for Supermicro semiconductors. I don't think it's good at all. I think they got really big really quickly. Too big, too fast. Peloton's been going back big today, too. All right, so now we got a couple minutes past this, the opening bell. I'm going to buy 2 contracts of micros. See if we can get a reversal in the books here. Redeem ourselves. There we go. There we go. All right, so we just made about $40, $50. So we're 50% back to where we were. I wanted the reversal. And I see the SPY rebounding back up. I see the NASDAQ trying to come back up too. So we caught the reversal there. We'll see if we can do it better. This is why micro contracts are useful. Starbucks breaking down a little bit finally today. Apple breaking high, so a lot of stuff looks like it's going to come back. I'm going to buy this little dip and see if we can add into it and play some more with our funded account here. There we go. All right, just got another 30 bucks. So far we made about 70 since the open, or since we switched accounts, so that's nice. Here's the P&L history if you want to see it. Yeah, Google testing highs. What a drop, though. I would usually buy this right here, but it's a big drop. And yeah, see, that's momentum on the downside now. Look at that. The PCE data came in as expected month over month for core PCE, 0.3%. That's what they expected, was 0.3%. Core PCE year over year was slightly higher at 2.7%. So a little bit worse inflation data, but mostly as expected, neutral data. Jobless claims showed a stronger economy than expected at 216 unemployment filings versus 230 expected. So less unemployment filings than expected. And so basically pretty flat, slightly better economic data than expected, but mostly pretty flat. I'm going to buy this. It's still risky. I'm going to take just one contract. All right, so we just made a little small little scalp there too. You know, we're around lows of the day. And a lot of the time, everybody always jumps in short here. But I like going long because I think most of the time, low of the day breakouts fail. All right, so we're up over 100 in this account. We're basically back to break even today, which is nice. And again, that's kind of what happens when we wait and let that opening chop settle down a little bit. Google just broke highs again, up to 178s right now, chat. 178s for Google. Looks good. Looks strong. There's the rebound back up. Now that we started to show this trend, we can't really do anything here. Because basically what we see right now is we see this trend forming. This choppy little trend up, down, up is what we currently see in it. And so this could essentially break on either side right now, in my opinion. I think it could break on the upside, start to do a longer term reversal. It could break on the downside and just start to go really, really weak and be a scary Halloween. Hey, either one is possible. I don't know which one is the most probable, but either one of them is possible right now. It depends on what blue chip stocks do, of course, because these are just gauging blue chip stocks. But so far we have this little neutral trend, and so I'm going to stop, take my foot off a little bit, and wait to see this range break on one side at least. It looks like it's going to try the downside short term, and yeah, we'll see what happens. I'm right on the day, but only one of my, yeah. What do you guys think? You think this trend breaks on the upside or downside? Meta's turning, so I tend to think Google's breaking highs though, so Meta's up to 187s. Apple's testing highs too. I don't really know, man. This is too hard to predict, I would say. Either one could happen. Guessing downside. Oh yeah, we do have Chicago PMI dropping in about a minute. Chat, 1 minute for Chicago PMI. Not the biggest release, but still somewhat relevant. So Chicago PMI expected at 46.9. It's a strengthening gauge of manufacturing. So we'll see what happens with it, but 20 seconds. Five seconds. All right, 41.6, much weaker manufacturing data than expected. 41.6 for Chicago manufacturing data. And look at the downside break here. So we did break out of that range on the downside. Chicago PMI showed weaker manufacturing sector than expected. And look at that fall in markets afterwards, too. Look at this. So it's falling down some here. Interesting. Hey, later, Tony. Have a good day. All right, so we're shorting again. So we could fill some of this gap, but we got a cushion already. So it didn't really make that much on that one. See, again, go the really short-term nuance, down wicks, short-term gap fill, or candle wick fill. You can kind of see it on the SPY here, too. That's what I've been seeing lately. Win by doing the opposite of you. Well, the manufacturing numbers were worse for manufacturing. All right, so we're out here playing with some stuff in the background here. Where the numbers, I see a tiny. NASDAQ starting to flush. Breaking down. Yeah, so I'm watching the market flush. I really gotta look at a 1 minute. This is down a lot. Look how deep this red is. I'm gonna buy this now, but it's also kind of a risky position. I had 2 contracts to it. Alright, so just made another $20. Pretty good day. We're up like 100 and something. We're actually pretty green on the day. All right, chat. All right, so we bounced up a little bit here. Look at the Q still flush though, so we're still getting a lot of breakdown on this. Where's Super Micro at? Is that what's dragging the market down? I haven't even seen it. Yeah, Super Micro down to 27s. I don't know. I don't watch the Texans. Yeah, so I just don't watch the Texans, brother. Sorry, dude. I watch the Saints and they suck lately. You know. All right, so we are sideways after a big breakdown. A lot of people are waiting on Super Micro's price action with all this stuff, though, chat. So Super Micro is broken down a lot. It's kind of rebounding some, but hello. Hi. There's Carol's daily call. All right, so we're starting to bounce up a little bit here. Yeah, sorry, I'm kind of building some stuff in the background. Yeah, we'll have to keep going back. Starting to bounce up, Baltimore Simmons. Hey guys, so we'll be back later on today, guys. I just don't see much else going on right now. Market's kind of boring. It's broken down a little bit. We'll see which way it heads moving forward. You know, it's got a long way to go. Again, if you want to day trade with me, try Top Step. Link is right here if you want to check it out. There's no PDT rule in futures, so that's what you see me trading today. This is a 50K funded account. We're up over $100 today in this account. I think the market could be choppy, and so I think we might rebound a little bit, but who knows? We are heading into big Apple, Amazon earnings this evening after the closing bell today. We will be streaming both of those completely live on stream, so stick around, chat. Hit the notification bell. I appreciate the love. Thanks so much. I'll see you guys later. Y'all check out Top Step. 0 commissions. This is the powerful thing. I can trade tiny size, micro contracts, 74 cents in fees per trade, 0 commissions, no PDT rule. The single greatest way for traders to learn how to day trade, and it ultimately saves new traders money. If you're new, do not fund your own account. You're almost certainly going to lose. Try a funded account program. Test your skill. If you lose, it's not the end of the world versus risking thousands. Try it. There's the link. I love you all. Y'all have a great day. I'll see you guys later on in a couple hours. Y'all be good. Be careful, guys. Be careful.